traders at UBA say that coupon payments from last week will continue to drive bullish sentiment on the local bond market. And I have Chuka Nwachukwu, the head of fixed income trading at UBA, to discuss activities in the fixed income markets this week. Thank you so much for your time today. But let's get the story on what the coupon payments there how they impacted the markets.
Okay, thank you, Ken. The markets, funny enough, has been liquid. Last night, FAC came in, but what actually has been driving sentiment, like you rightly said, is coupon payment of last week. We've seen a lot of this payment being reinvested into the bond space. And that's why we've seen the yield drop slightly. The longer end, which is the 2042, which was on the auction, about 3-4 days ago was trading around 14.2, is currently trading around 14 levels, and this is what has driven the sentiment, and we see this continue as long as the system is liquid till the end of the week.
Yeah, because let's talk about those FAC inflows more or less and how they also impact liquidity as well.
Yeah, prior to yesterday or prior to this week, the system has been pretty tight, and so a lot of respite came in from some inflows as well as the FAC inflow, and so it's helped rate a moderated rate, at the interbank market. We've seen the rate, drop as low as 13.5%, 14%, unlike the previous day where we see as high as 15%.
Yeah, but when you look at the markets as a whole and looking at the third quarter, more or less, what trends are you seeing play out across board?
Well, the trend on the, let me start on the fixed income side first. On the T-bill side, we've seen the yield slightly move up. NTB auction last week came out at 8.5%, from 7.45. And so we've seen this upward movement on the T-bill side, especially across the board. Not only on the special bill, which has always been the bit of attraction over the couple of months and weeks now, but also on the NTB bills. And so on the bond side, we see this upward movement continuing. Inflation is also a major factor in terms of investment. So we've seen inflation move as high as 19% levels, and we from all projection is going to go further than that to about 20%. And so these are also pointers, going into the the first half of the year, that this upward movement in yield will continue, and as long as inflation continues to drive investment decision, we see the parameters moving upward.
All right, because we've seen some news flow this week that more or less gives us some insight into the government's debt strategy going into next year. We saw the announcement of the 19.7 trillion budget going in for next year, and more or less how the government plans to fund its 11.3 trillion deficit there. And I'd like you to speak to more or less the debt strategy for Nigeria and how you see this, how the market will play in achieving the government's aims and objectives.
Okay, like you rightly mentioned, the government proposed budget for next year is about 19 trillion, and then you have a deficit of about 11 trillion. The current budget is already on a deficit of about 7 trillion. And so what it means is going into an election year, most importantly, I keep emphasizing this election year because, you do not expect a lot of investment inflows to come in, pre-election year. And so we found out that government will also, we laid heavily on the local market to borrow. And if that happens, it means that we see yield, move further up because, if local market is the only avenue for government to borrow in terms of financing its budget deficit, then it means that they'll have to make the yield attractive. And if that happens, then the yield will have to go up. And so, this and other parameters will give a pointer to the fact that the government also will also look at trying to develop some of his infrastructural development, some of his programs. They will need to meet up some of these programs, and some of these programs need funding. And so these fundings will have to be borrowed from the local market, and that will obviously drive the sentiment going to the fourth quarter of the year, and then first and second quarter of next year.
Yeah, because how do you now see this playing out across the yield curve then?
I see this play out across the yield curve, like I said earlier, in terms of yield movement. We see this as a positive in terms of bullish sentiment, because those who are looking to invest on the fixed income market, we hope to see a better yield and a much higher yield. And if this happens, then it will bring a lot of investment into the fixed income market.
Yeah, but do you think that the activity is going to be more skewed towards the middle of the curve, the belly of the curve, or more or less towards the shorter or longer end?
Well, presently, most of the investment on the fixed income market are purely the local investors, which is mainly the PFAs. And so we've seen that over time, especially on the bond side, the longer end of the curve is more attractive to the PFAs, especially the 2042, 2045, and then 49, as well as the 50. So we see them play on that end. But for those looking for quick profit taking, we see them play more on the shorter end, which is the 2025, which is still on the auction. And so by and large, we just see for long-term investments, the longer end, and then for short-term profit taking, the shorter end.
All right, but on the FX space now, what's more or less impacting the I&E window activity?
Okay, there was a slight depreciation on the I&E yesterday. Yesterday was it traded at 430. Today it's trading around 430 half and 431 levels. So the sentiment is still the same thing, demand. But again, if you look at the activities of CBN over the past couple of days, you see that they brought a little bit of respite, especially on the PTA market, segment of the market, and also on the SME segment of the market too. They'll also be meeting quite a lot of demand there, and this has also helped the pressure on that side of the market.